The also the Cowan move here to 118. Let's talk some more about where to go in a market where everything's been floating up. Alan Nuckman is Chief Market Strategist at Agora Financial. Let's talk macro first, Alan. We've got a little bit of softness, but it doesn't look like it's going to last, right? We're like slowly grinding off the overnight lows.
This is unchanged in my book. This right now is unchanged. I wouldn't even say it's negative. Look where we closed on Friday. We're up 2% across the board in the Dow, the S&P, and tech. And if you look at tech's up 7% in 3 weeks. Do the math on that. Tell me what that annualizes out to be. It's been a pretty strong run here just in 2020 alone.
All right. We can't do that though, right? We can't annualize throughout the whole year.
Just for fun. Just
okay,
for
I
fun
like that.
We can.
All right. You set me up for an easy one there. Alan, what are you looking at today, all right? Because I know you like to hunt for things that haven't been getting the same bid as everything else, but what isn't in this market? You're going into pharma, right?
Yeah, I'm looking for stocks that look bad enough to be bought. And that's this perfect stock right now. MYL, Mylan. It's got a PE of 5. So let's start off with that. That tells me it's cheap. I really like the bottoming formation, the pattern that we see here. Now, this stock was the 12th worst performer, is the 12th worst performer of the S&P 500. So where's that put that at? 488. Actually, I don't think there's actually 500 stocks in the S&P 500.
There's a few
but
more.
anyways, you can see what I mean. All right. So this is a dog. It's down 25% in the last 52 weeks. Now it's trading sideways between 17 and 23. So since what are we looking at? April. Or May, I'm sorry. So I'm not good with numbers, but you know that's a long time. So we're at this $20 midpoint pivot point that we can lean on. If it breaks out of this range, we're looking at 26. That's what I'm looking at. A longer term position, an April position in this option. The April $20 call is going for about $2.75. And it's $1.75 in the money. So our break even's about $1 away with 3 months of time.
Okay. So now, Alan, I know that you're not a big fundamental guy, but the story from Mylan and the acquisition of Pfizer's Upjohn business, that was back in the summer of 2019. That's basically where that bottom formed. So the bottom you're talking about, it looks like we bounced up from around 16 and a half, 17 bucks. There might actually be a little bit of a story behind that as well to kind of give some support as investors try and consider maybe a turnaround story for the beaten up name.
Right. We've seen this movie before. When it trades sideways, forms a bottom base like this, what happens, I don't know what the catalyst is going to be, and that's not my job to predict that. But when there is some sort of upside burst, it causes these shorts or these non-believers to cover, and then we could get a rally run. If you look at the chart pattern here, there's some gaps up above, and there's a very attractive gap at $30. So let's remember where this stock is and where the risk reward is on this stock compared to the overall market. I'd rather be buying a dog stock in this market environment that's gone straight up because it has, the positive potential to play catch up in this markmarketplace.
Alan, you generally like the stock replacement. This is another example, right? When you're buying the in-the-money calls, and they're quite in the money, about $1.70 right now on a $21.50 stock.
Right. What I try and do is get a delta of 70% or higher, meaning that it's going to act much like the stock. So that's why we go with this in-the-money option, and that's the strategy that's been successful. Instead of buying the shares of stock, even though it's only a $20 stock, you can get a lot more leverage, and it's limited risk leverage when you're buying the in-the-money option for, what are we looking at, about $275 right now, $275, controls 100 shares of stock, a lot less capital outlay than buying the shares themselves. Now, if we get a range breakout that targets 26, at 26, the option will be doubled. And so that's an example of how this strategy is successful, that a